Hey everyone, welcome back to Stock State everyone, where we learn how to swing trade and invest with good risk management. And today's video, I just want to talk about the recent market correction and what I've been doing and what are my plan of actions carrying forward, and as well as I hope to impart some of my skills in rebalancing portfolios from time to time. Because rebalancing portfolios is very extremely and very important throughout investing. Okay, if you are a very passive investor, okay, that's fine, okay, where you average in dollar cost average every single month, that's fine, and that's actually a very good way to take emotion out of investing. But however, if you do want to maximize your gains, right, and minimize your losses, okay, a little bit more active approach is actually better if you're able to control your emotions and able to dip buy at the correct times, and as well as take the appropriate actions over time and not get too greedy and fearful. Okay, these two emotions are the ones that actually drives us a lot to make stupid decisions, right? That makes us, lose money over the long term. And in fact, there is actually such a thing called behavioral finance, okay? That, where psychologists actually went into, discuss and actually think about, how the human psychology affects how we invest. Okay, and maybe I'll do a series on investing psychology, but, I'll update you guys on that then. But today, right, let's talk a little bit more about the correction. So the correction, right? Nasdaq up again from the all-time highs, right, all the way down here itself. Okay, and this drawing was made, for my previous video, my top 3 swing trade stocks for that week. Okay, and I actually talked a little bit more about how I think that this will actually rebound up and down, right, from the 50 moving average to 100 moving average for the next few weeks, because I feel like the market is now in the indecisive mode because people are in a sense too scared. The new retail investors are too scared, right, to pour money in after this huge correction, because maybe they have never experienced this kind of thing before. They just started investing. Okay, but again, this is actually a very good lesson. Actually, I feel that people who actually started investing now, right, it's good because you get to experience what is it like to be in the red. It's not just fully exuberant investing, okay, where you invested from here, right, from last November, right, all the way to now, right, just been on the trend. Okay, wow, every day is just up. Okay, even when on down days you're just down a little bit, then you go on the next bull run again. Okay, the next run upwards, but they never really get to enjoy the pain. Okay, what do I mean by enjoy the pain? Because you gotta embrace it. Okay, the stock market is a place, okay, where those who don't understand things, right, will feel very frustrated. They'll feel a lot of anxiety. Okay, they feel that they have no control. They feel that every day they're just waiting. Please market be green. Please market be red. Please market be whatever. Okay, whatever they are playing. Okay, and they're waiting for the market to give them scraps. Okay, I'll give you this. Okay, instead of having a plan in action. Okay, and have a predetermined plan, right, of what you already would do, right, if something happens. And what do I mean by that? Okay, for me, right, basically, right. Let's just give you a little bit of a show of what I've been saying and a little bit of credibility and say that I'm not just all talk. Okay, so basically, right, if you look at my channel, right, last time, right, in earlier days, right, I can see that I made videos. I normally do top 3 swing trade stocks videos. I do my tutorial itself, and my videos aim to be very transparent as possible. There's not a lot of hype there. Okay, I give you the nice risk to reward ratios. Okay, the risk management strategies, the plays, the tutorials, and teach you how to do it, right. And I aim to be fully transparent and give you the downsides as much as the good sides. Okay, and even sometimes I focus more on the downsides because I feel that that's the part where a lot of people are not covering. Because that's the area I wish to cover for you guys. Okay, I made a lot of videos, like GME, why you should not be chasing. Okay, and always like why you should not buy this stock, why you should not buy that stock. Okay, these videos, right, sometimes are not very popular, but I still make them anyway because I do feel that it is important, because my job here is to save you guys some money, right? And in one of my last month's video, I made a stock on DKS, right? Why is it the most undervalued stock, right? I really do think that you should go and watch that video if you haven't done yet. Okay, okay, basically, right, I went over here, right, I talked about the overall markets, right? Okay, the first few minutes, right, from 1 minute all the way to the 3 minute mark, right? Okay, I think that this area is a good area. Go and watch it, okay? And I do mention in that video that how I think that the overall market is so overvalued, right? And how my thoughts on how to rebalance between value plays as well as growth plays, and how do you make use of both, right? To maximize your gains. In today's video, I will actually address a little bit more about that strategy as well. So in this video, DKS, right, it's one of my value plays that I had pointed out then, right? And I said that company is very defensive because it has very strong fundamentals. The P ratio is so low, right, that even if a market correction happens, right, I don't assume that this company will fall by much. Okay, and after I pointed it out, okay, around like here, right, like $70, right? It went on an insane run up to $79, right? Which I took a little bit of profits, and it recently dipped a little bit back down again. But again, from back to where I bought it, right, February, right? Compared to a lot of other companies, if you have bought in at Feb, right, you have suffered a massive loss right now, up to 20%, 30%. But again, DKS held its ground, okay, closed yesterday up at $71, okay, so from where I bought it, right, on February, right, which is pretty late actually, right, I'm still up, okay, so basically you can see that, these kind of companies are so defensive, and you must allocate, right, always, right, a certain proportion, right, towards this kind of value plays and growth plays as well, so that you can switch between when you want to go over to the value place, when you want to go over to the growth place. And what do I mean by that? Okay, so let me just illustrate a little bit, right? So, example, you have a lot of growth plays right here. Let's see my doodle, right? So you have a lot of growth plays, right? Growth plays, then you have value plays, right? Sometimes you want to allocate, right? Value plays are value plays that are very, very strong, when it's in a correction territory, okay? Because when there's rotation over to value plays itself, okay? Because when that happens, right, you can actually sell the companies, right? You can sell these companies, the value plays, right, to buy the growth companies, right, at a discount, okay? Discount. Okay, sorry, pardon me, I'm writing with a mouse, so at a discount. So again, you can use the money over here, right, to sell out, okay, and get some profits, right, and put it into a growth company right now where everything is on sale right now, okay. Basically, look at one of my favorite companies, right, Teladoc, right, one of my biggest holdings in my top 4 long-term investments, right. Holy, from its all-time highs of $300, right, it has been dipping all the way, and I've been adding all the way through because it's so delicious, right? Because it's so much potential, okay? I've been adding all the way from here, then adding another one here, then recently I added one at the dip over here. Just recently adding more and more and more because I feel that, this company has so much potential and its true value should be way above around 300, 400 in a couple of years' time. So for me, right, high conviction, okay, I did all of my research, okay, and a lot of deep research on this to find, a few select companies that I feel that have a lot of potential, and I'm just sticking through with my conviction and buying those on the dips. So again, DKS, right, okay, it's a company that's on the value side, right? So if you allocated some portfolio, there, right, you wouldn't be hit as hard as you would if you allocated 100% all in growth companies. Okay, if all in growth company, the big names, right, the growth companies, right, I presume your average be down around 30% from its highs, at least 30%. Okay, rather my portfolio now is quite hedged because other than me having a good amount of value plays like DKS, right, look at my other videos as well. I made a video on, okay, way back, right? I said that, why am I not afraid of a market crash, right? Okay, not a lot of people watch this, right? But because I don't know, but because you don't want to watch a market crash when the market crash is not happening, but when a market crash actually happens, then you want to watch a market crash. Because, okay, so again, right, but okay, that's just me ranting, okay, but basically, right, stock market crash, right, I was talking a little bit more about this, right? Basically, I was saying I will always keep 20% in cash, no matter when. Okay, and it's a discipline. It is a discipline because many of the times when we do swing trading, when we do whatever, right, when we do our long-term investments, we get so greedy, right? Especially when you see the companies, right? It's been like NASDAQ, right? Oh, it's been trending upwards so much, right? Holy crap, I'm missing out on so much, okay? I'm missing out on so much, like, oh my God, so much gains. Every single day is like 2%, 3%, 2%, 3%. Then you're like, wow, so much, right? So much. I'm so if I don't put all my money in, right, I'm wasting money, I'm losing it to the wind. But it doesn't work that way because a correction will eventually come. Okay, be it a minor correction to the 20 moving average, a medium-sized corrections to the 50 moving average, or a heavy-sized correction to the 100 moving average. You never know whether which one will be the actual correction itself. So you always must be prepared with 20% cash, which I always said, in this itself. Okay, I stuck to my discipline. Okay, it's just been something that I trained throughout my financial career, right? It's always been there, not let the greed and fear overwhelm you, right? And make logical decisions instead. So again, go check out the video if you haven't already. Okay, that's actually another good video itself. And again, after that, right, I also made another video on the top 10 specs, right? Or top 3 specs, my bad. Top 3 specs I will buy under 1050, right? So this I use as you can see the thumbnail over here, right? I said it's a hedge against a market crash because right now, right, okay, some of the plays that I talked about, right, okay, like GIX, right, I loaded more at the $10.50 range, right? So throughout the entire market saga, right, okay, it's just down, right, 50 cents because again, specs, the floor level is around $10. Okay, so again, now it's a cash storage. So again, it'll fluctuate around the $10. Maybe it goes to $9.99, then goes back to $10, $9.99, $10. Okay, but again, if I really do need cash, right? If I, example, I bought the dip or use all my cash, my 20% cash reserves, right, to buy all the dips here, right? 1, 2, 3. Oh, I run out of cash. Oh my god. Then the market decides to, they say, screw you. Okay, I'm just going to drop further, right? Oh, it'll be quite scary to think about, this, right? But basically, we have to be prepared. So for us, right, the rational investors, right, you and me, right, what do you want to do? You want to, right, always be prepared for the worst case scenario. Okay, it pays to be prepared. Okay, do not be too greedy. Okay, obviously, okay, my gains, right, will not be as much as someone who just YOLO'd, right, and just drop 100% of their portfolio into one stock which rallied maybe 50%. Then he's like, oh, okay, man, I made like 50% of my entire portfolio. How about you, man? You did so much planning, you did so much risk to reward ratio, whatever. Okay, and you only earn like 25%. Okay, sure, man. If that's the guy's way, right? Okay, so be it, because he's taking a lot of risk, right? And for him, right, if he can sleep well at night doing those kind of things, right, good for you. But for me, right, I couldn't sleep well at night if I know that I'm not prepared for the worst case scenario. So I will always want to be prepared for a worst case scenario, because for me, I think I'm a very, very conservative guy. I'm very, in a sense, I'm more for the cautious. I'm erring on the side of caution most of the time. Okay, even through exuberance. So in the sense that sometimes I might want to let up a little bit on that, because I might actually have lose out on opportunities that otherwise I would have gotten on, right? But that's just me. Okay, that's just me. Okay, so if you want to watch, for the more cautious side of things, right? Okay, then maybe my channel's for you. So again, right, as I said, back to the point, right, my spaq storage, right, so again, my GIX, a few others, right, so again, if the market tanks, right, we all the way down here, right, okay, Teladoc back to under $100, right, which I don't think is possible, but I never thought that Teladoc will be back at 100, less than 200 a few days before, but it did, so you never know. So basically, if it dips down even more, right, then I used up all my cash, I can sell my SPACs, okay, which have a floor, okay, then I can raise more cash as well, okay, which the SPACs now hold another 10% of my portfolio, okay, I can just sell every single one of them if I need to, okay, and at a premium, of course, because I bought them around 10.50, right, so it's a little bit of premium to release those shares, right, but it's okay, because I know that risk reward, the opportunity cost, okay, leaving this money in this SPACs right here, right, only has a fraction of a chance, right, of it appreciating, but however, right, putting in Teladoc or companies that have high conviction in, right, which I know that you'll go back to its all-time highs at 300, right? It is in a sense a guaranteed 50%, 50 to 60%, increase. Okay, and why would you not use that capital, right? So again, it's about opportunity cost. Okay, shifting assets from different modes of assets, right? Shifting in and out. Okay, cash is also a position. Okay, you're shifting in here and there, here and there, here and there, and taking positions that might do well. Okay, and again, right, see, and why you say, why did you put in SPACs in the first place, right? Why don't you just keep all in cash? Okay, so you see, right, I'm also, although I'm erring on the side of caution, I'm also, in a sense, I'm also optimistic a little bit as well, because I do think that, this rally, right, could go even higher. Okay, this rally, right, okay, at this point of time, right, okay, at this breaking point over here, let's take a look, right? At this breaking point over here, okay, no one knows, right? At this area, everybody's just looking at this area. Oh, okay, pardon me. Okay, at this area over here, everybody's just like, should we rally higher or will we go back down? Okay, at this point, nobody knows. Nobody knows, man. It could very well go back to its all-time highs, or it could break lower. So, if it did go back up, right, all my SPACs and everything would have done pretty well. Or if it never really corrected this heavily, right, just continue rallying up higher, right, then my SPACs might have popped, okay, and get a good reward, okay, and as opposed to holding all in cash. So again, right, I'm trying to maximize my reward, right, and minimizing my risk as much as possible, okay, and achieving a nice balance. So again, this one is up to every single one's risk management and risk tolerance. So again, you have to craft your own, portfolio strategy as well. So again, SPACs is my other strategy which I use, right, to hedge against this kind of market crash. So again, for now, if I need to, I'll sell out of them as last resort to raise cash, okay, to buy the dips on my long-term investments. Okay, and after that, right, when it rises again, okay, when it goes back to all-time highs, okay, I would then what happens? Okay, so right now you can see that I'm actually buying a lot of companies, right, that is in the growth space itself, okay, the growth space. Okay, I'm selling out my value plays, selling out my cash position, selling out my cash position, selling out my SPACs to buy the growth space, because now it's grossly quite undervalued right now. It's at a good price. But when my growth appreciates, right, like a lot of my companies appreciates back to its all-time highs, right, then what happens? Then it's time for rebalance again. You got to rebalance and rebalance again. Okay, so then, right, almost 100% of my portfolio, right, 100, right, will be in growth plays, almost all. Like I almost say all, okay, but maybe quite a significant amount. Then by then, right, okay, maybe scratch that, be 80%. Okay, I don't know yet because I haven't sold out my specs yet. Okay, but 80% will be in the long term on the growth plays. So when it reaches its all-time highs, right, then I've gotten a good gains, right, for maybe like 30%, right, from its the low point over now, right. Then I'll actually take profits. Okay, I'll actually scratch, maybe take 30%, right. So I'll leave 50% growth plays and shift the other 30% back into the value plays itself, if you know what I'm saying. So again, I'm shifting assets here and there. So back then maybe I'll evaluate again, maybe DKS, right? It's a good company. Okay, I feel like, oh, maybe other kind of value plays which I'm looking at, oh, looks pretty decent, right? I'll shift it back into the value plays itself as a management, as a percentage hold. So again, if another correction happens again at its all-time highs, right? So example, let me give you a hypothetical example, right? So if it rallies up all the way to its all-time highs again at its top, right? This is where I will take my 30% portfolio, shift into value plays again. Because if it corrects again, right, then again I'll have cash, I'll have my value plays to sell again to buy the dip. Okay, and this is how you play between assets itself. Okay, buying, shifting, buying, okay, shifting and managing again and again. So if you forget about it, right, you just leave 100% in growth, right? Then when it happens, you just get destroyed. You just get totally destroyed. Again, you are not in a position of power to take advantage of this kind of dips itself. So if you wish to, better time, your entry, right, in, my, like the timing the market tops, right, and the bottoms, right, then I do really hope that, you guys can watch the swing trade tutorial, the preparing for market pullback tutorial, which I made 2 weeks ago, ironically, right, at this level over here, around here. Right before the decline. Okay, it was in a sense a stroke of luck because the timing couldn't be anywhere better. Okay, so those who caught it right, good luck, good job, and good job to you guys if you rebalanced it. But basically that video, right, is more for a tutorial actually about how to rebalance a portfolio, which I made a nice infographic over there. So I hope you guys check it out as well. And if you get value out of this, smash the thumbs up button, subscribe to my YouTube channel for more video content like this. And yeah, so go and check that video out, okay? I shall leave you with this, okay? To go and experiment and go and like take a look at how to better time the top and bottom. And I shall see you guys in the next video. So, stop, stay up.